Hello to all of you. Well, it's Scott Pickens, CEO and founder of WealthE Migrate, and I'm here with Lauren Williams. And I've had the privilege of meeting Lauren over a year ago and watching what they're doing at Crestwood Property Solutions. Now, a good friend of mine has invested with them and only speaks highly of them. And what I find most interesting is Lauren does no marketing. It's all through word of mouth. So you must be doing something right. Tell us a little bit about Crestwood Property Solutions, how it came about, and why customers love it so much.
So Crestwood started in 2013, and basically it was started off the back of my personal interest in property and wanting to build a portfolio in the UK. And I put myself in the position of a South African investor predominantly, but anybody actually in wanting to invest in UK property who sits overseas. And it's quite a challenge to actually think through how you would do that. You know, there's many parties that need to be involved. How would you actually navigate the process in a foreign country? So we built Crestwood on the back of that and saying, well, what is the value proposition that we need to provide to our customers to help them through the entire process from start to finish, and provide support and assistance along the way at an affordable cost that didn't sort of blow their budget out of the water. And I think it was based on that, putting the customer first and actually thinking about how we could address their needs that I think has led to the success of Crestwood so far, because it's all about actually solving a problem for the customer and doing that in the most cost-effective way that we felt was possible in the UK. So we've grown substantially over the last couple of years, and as Scott said, we've been very fortunate in that our growth has been predominantly through referrals, and we've got a wonderful client base who comes back to us consistently, and we've got many clients who've actually owned 7 or 8 properties now through Crestwood.
Incredible. I mean, we're standing behind your beautiful house here, and I have to say, just by the way, I've been to a lot of houses in England, but this is definitely the best by a long way in terms of, I'll do a big screenshot of the garden after so people can see, but it really is spectacular. I mean, and you guys, as I understand this, bought this as a bit of a dump with a whole bunch of barns and caravans and everything. So it was really your insight into what was possible here. That's just an example. However, what's important, these are not the type of properties people are buying. And, I've been investing in London since 2002. I'm very worried about the London market if you're buying an off-plan development from a developer. But that's not what you're doing. You're going out to the home counties. You're finding where sort of middle-class English people with, husband and wife and 2 kids or whatever commuters need to live, and much cheaper affordable properties. Just talk through that strategy a bit, because every market has a niche, and you've hit that niche perfectly.
Well, I think there's a couple of things that are absolutely fundamental when buying an investment property. The first one is that it's in the right area, and the home counties are excellent in that regard.
Just to explain home counties, sorry, for those that aren't in England, you basically got London and you've got the M25, which is the ring road, and the home counties tend to be the commutable area around the ring road. So as an example, I'm staying here with Ken and Lauren. It takes 30 minutes by train to get into London Bridge, Charing Cross. Last night we came back from Cannon Street, so it's very commutable into London. I mean, it's still London, but it's effectively, this countryside is absolutely magical, and it's got some of the best schools as well. So
absolutely. So there's the most important things is within an hour commute to London.
By train, obviously.
By train. Yep. Very good schools. This particular area of Kent is phenomenal in terms of
So I'm being a translator. Kent, southeast London, basically.
Yes, southeast. Some of the best schools in the country, top private schools, top grammar schools. So it's a very sought after area for commuters to basically live and work here and enjoy the peace of the countryside, but being very accessible to London. So there's a couple of factors that we look for, and that firstly is, excellent location, close to a train station, close to the local schools and independent schools. The second thing is that it has to be a viable property that generates cash flow from virtually day one. And that is very easily achievable in the UK by picking the right locations where there's good rental demand. Absolutely key that every single property we can tenant very quickly. Our main concern is that our cash flow is positive for our clients from as soon as we possibly can achieve that. We do conversions as well, so the third aspect of it is looking for added value. how can we add value to a property to increase both the capital growth but also the rental income for clients. So that's fundamental, and we've done sort of various projects ranging from quite small sort of conversions to fairly large scale, where we look at how do we maximize the potential of the property to achieve better cash flow for our clients.
Yeah, and I think, I've done a couple of videos actually out at the properties with you, and just giving people a feel. So if people want to, I don't know, YouTube's changed their thing, but anyway, if you click on the link below, I'll put in the links to those videos so people can find them. And just to be clear as to what Crestwood does, it finds properties for people, it renovates to create value, it then finds tenants and puts them in, and then it manages them. And I've always taught people one of the hardest lessons I've learned in property is where I've divorced the company. So where someone finds me a property, like a developer sells me a property, and then I go try to find a management agent, that's when I've lost money. When I deal with someone that is accountable from beginning to end, that's when I tend to find the peace of mind. And it's the partners we like to work with, and that's what Crestwood's doing. And as you said, there's actually a fourth stage, which is referring friends and reinvesting, which is you've clearly got a track record of doing that. Lauren, two last questions. Brexit. Here in England, everyone's excited about Brexit. Outside of England, no one cares. But the point being is that it does create uncertainty. And is it a good time or a bad time to invest based on the fact Brexit, is impending?
Well, nobody has a crystal ball, so I don't think anybody knows exactly what's going to happen with Brexit. I think if they did, they'd probably be very wealthy. But Brexit has brought uncertainty to the marketplace, there's no doubt about that. So certainly in London, prices have come off slightly. We haven't seen much movement in the southeast yet. Prices are fairly stable.
And again, when you say coming off, you're talking the high-end properties versus, again, that middle-income Englishman that's still English lady that still needs to live somewhere. You know what I mean?
Absolutely. So my next point was going to be the fundamentals that drive the property market in the UK are not Brexit, it's supply and demand. And there is such a short supply of properties here in the UK. There's so much demand for every rental property that comes up. We generally have 3 or 4 tenants who are fighting for that property. So the problem is supply and demand, and until that problem is solved in the UK, which is not in the very near future because they're simply not building enough houses to supply the growing demand. The population's growing, the birth rate's increasing. There's no signs of that decreasing dramatically. There are still immigrants coming in. There is still a net growth in the population. So, the problem is supply and demand. It's not really Brexit. Brexit will cause some uncertainty in the short term, I believe, but that also leads to buying opportunities where, people may be forced to sell their property slightly for less than what they'd anticipated because they simply want to get themselves into cash because of the uncertainty. I don't think that that's a problem for property investors because I think they're looking more long term. So as long as you don't need to realize cash immediately, your strategy is very solid and very sound, in my opinion, in terms of property in the UK.
To be honest, I missed, if I look back, I missed the 91 to 94 crash. I was still at school. But I did take advantage of the 2008, 2009 crash. And there were tremendous opportunities here. Now, most people don't know this, but London property actually lost 19% over the GFC, global financial crisis. But in less than 12 months, it recovered, and it's only just grown on top of itself. However, the most important thing I always say to people, if you buy for income, then you buy for sustainability, and you can ride that wave. If Brexit has a correction and you're getting paid your passive income that's positive, you just ride the Brexit wave because long term the fundamentals are sound.
I think also, I bought in 2007 and the property market crashed in 2008, and a lot of people said to me, "Wow, you made a big mistake, etc." I said, "No, I haven't. I'm in this for the long run. There may be a short correction in the short term, but over the long term, I've done very, very well on those properties, and I certainly am very glad that I bought them in 2007. So I think it's very much, you've got to have a long-term view. They were pretty stable right throughout 2008, 2009. They lost no value at all because they were in good commutable areas. And actually, because of the demand in terms of schools, etc., they really stabilized. They didn't lose value. So I think that's another important point. If you're buying in the right areas and good, solid investment destinations, you're pretty secure in terms of that investment. And rental values went up. So actually, the investment, got better and better year on year, as opposed to sort of it all being doom and gloom. So I think it's a matter of buying well in the right areas at the right price and taking advantage of buying opportunities if they are there.
And added to that, having partners on the ground that know what they're doing. So I could come here for a week and try and find a good property. I got no chance. So one last question, Section 24. Most people probably never even heard what I'm talking about, but there are tax changes coming to buy-to-let properties. What is it exactly, and how is it going to impact?
So what Section 24 basically is saying is that the mortgage interest will not be available to be deducted against your income from a tax perspective anymore. And I think what they're trying to do is sort of close the gap where people were actually gearing very, very highly, which led to some of the problems that we had in sort of 2007, 2008. So it's not necessarily a bad thing. It's probably it was bound to come. So the message really for investors is it's not going to essentially affect the property market too much, other than your tax situation. And the message is not to gear too highly, because that could become a problem. But it also may lead to buying opportunities where people who are very, very highly geared in their portfolios might be selling off properties, so there may be some buying opportunities coming down the track. I think the overall overriding message is property has been very, very sound, very secure investment in the UK for many, many decades. The statistics may fluctuate now and again, but overall, in terms from a long-term projection, it's been a very, very solid, secure investment for property investors, which is why so many people want to be in property.
No, exactly. I mean,
it's just one of those asset classes that has outperformed virtually every other asset class there is. So.
Well, I mean, your husband and I made a video outside Buckingham Palace, and there's a reason that there's sayings like "He who owns the land is king." So listen, thank you very much. I'm deeply, deeply grateful. From a Wealth Migrate perspective, we help people invest in bigger buildings, but through IPS and International Property Solutions, we love to work with partners like yourself that can provide people with the solution to invest end to end. And so, thank you very much for what you're doing, and I hope this has added value to people out there that are looking to invest in the UK, knowing that there's a trusted partner on the ground. So I really look forward to people being able to engage with you directly.
Well, thanks for your time, Scott.
Cool. Cheers.